Hey everyone, here is the breakdown on RENN. Traded this one today for a nice profit. Could have stuck around for a little bit more. A lot of things going on though, and I just decided to cut it loose when the big seller came in right here. You can see a big order clearing the books over 100,000 shares. Now at the time I was feeling pretty confident about the trade because there was a big bidder. Somebody showed up, I think somewhere around 80,000 shares on the bid if we were looking at the level 2, and that had me thinking that it might break through this resistance right here at 770. I mean, 70, 80,000 on the bid's not a ton, but it was big at the time. There wasn't a lot on the offer, but somebody came in and snuck them and sold these shares. But let's talk about how this trade played out from start to finish. This is a 1 minute chart, so each one of these candles represents the price action for the day. If we go over to a daily chart, all right, here's the price action on RENN, okay? You can see when it IPO'd, and then it's kind of been down, a couple of rallies in between. We've played this a bunch of times successfully, and I was actually in it the other day for a nice profit and wanted to get back in today, just short of about a $10,000 profit today. I was in it yesterday down here at 666, I want to say. Actually here, I was in at 666, and I sold on Tuesday, and of course on Wednesday the good news gaps up in the pre-market as high as well, heck, what did it make it up to today? High of 812. So I had it at 680, I want to say, and I sold it at $7 for 20 cents a share. I had 6,000 shares. It was a nice profit, but go figure. It runs to 812. That would have been another about $8,000 in profit, So that's the way it goes sometimes. You hit them one day and you don't the next. Hopefully we'll get a big score here soon. But I'm certainly happy with the $500 I made on RENN today. So here's how it played out. You can see the good news gaps it up. So the price opens up in the $8 range. Okay, the top of this red candle is the open. Let's switch this to a 13-day so it makes it a little easier to see. All right, so here's today's open. Top of this red candle. All right, then you get the high right here, and then you get the low, and the close is the bottom of the candle. The reason the candle is red is because it closed lower than where it opened. Okay, so the open is a gap. Here's the price action at 731. Here's the open all the way up here. That's what we call a gap. All right, and the easiest way to see that is to look at the 1 minute chart and go 3-day here. Okay, see this gap in price action? Here's the previous close at 730. Here's where shares opened up in the $8 range, okay, and then they immediately sold off. And let me switch it to a 15-minute. It'll be a little bit easier for you to see. Okay, so this is 15-minute candlesticks, and this is going to run at a 5-day chart now. All right, so here is Tuesday's price action, close at 7:30. Good news, okay, signing a deal with Microsoft, and the stock gaps up. Opens up here in the, what was the open? 808. Runs as high as 812 very early on, immediately almost, and then just completely drops in that 15-minute time period. You can see within a half an hour, 45 minutes into an hour, it's really made its lows. Now I put this out on an alert as a gap recovery, not complicated technical analysis. When a stock gaps up, a lot of times it wants to take profits and come back down. So when a stock recovers the gap, usually it'll climb after that if the circumstances are appropriate. Two things were in play today. The markets were running, and this company had good news. So once that gap is recovered, then it'll bring in a lot of buyers. Okay, and the reason a stock pulls back like this, it's not rocket science. Anybody like me, I was in here at, what did I say, 686? So I bought on Monday, I think, around 680s, figuring this was the bottom. And I sold on Tuesday in the 699 range before it pulled back, and then you can see the run up before the news here. Obviously people knew news was coming, but the markets were also very bullish Tuesday into the close. So here's this run up Tuesday into the close. Now look what happened. I sold here for 20 cents a share. Had I kept it, you know what I mean, and let it ride into the close, up here, I would have been up about $10,000 on my trade. I had 6,000 shares at 686. That's just how it rolls sometimes. But what's important to note, and the reason I bring it up is, say I held on to those shares, okay, and I rode through this nice uptrend into the close Tuesday. When the good news hits, and I see that I'm up $10,000, I want to take that profit. You know what I mean? I'm not going to let it ride. I'm not going to risk that it does a gap recovery. So I pull the trigger and hit a market order. Well, everybody who was in from these levels does the same thing, and that causes the stock to fall very fast. There's just not enough, buyers to support all the sellers. So you get a stock coming back down. Now, once the stock, makes it down far enough, then it starts to work back up, because the idea is all of these people either took profits and it caused it to come down, or they're long term, so they're not sellers and therefore not resistance, and the stock will continue up. So we're going to go over to a 1 minute 3-day chart again, and we're going to look at how the stock recovers the gap. Here's the hole right there. All right, that's the gap up. It recovers that gap, and I put it out on an alert right here because I wasn't sure if it was going to fully recover it. Now, had I waited a little bit longer, I would have made an extra $1,000 on this trade, but that happens sometimes. Okay, so the stock comes down. We were talking about it in chat. I put it out, picked up shares at 737 right here. I said in my email it might be a little bit premature because I knew the gap recovery was down in the 620 range. All right, you can see this quick sell-off right here, and then a massive burst in volume brings it right back up. So the stock recovers the gap, all right, and that's a technical analysis term that happens quite often, and then it charges up. I sell right here on this dip, and then it continues to 770. Now in my email I said, let's play this one from 730s to 770, 40 cents a share, 3,000 shares, quick $1,200. That's not a bad work day. And that's exactly what happened. Now, how did I know that it was probably going to go to 770, and why did I sell before it went to 770? Going to go to a 1-day chart. Picked up shares here, 737. It dipped. No big deal, because I said it'll probably recover that gap fully, might be a little bit early. I thought about grabbing some more shares down here, but I was in other trades and I didn't worry about it. You can see as soon as it recovers the gap, it fires, lots of volume comes back in. Immediately now we're looking for the stock to continue to make higher lows, and it does that. It starts to build and gets higher and higher and higher. This is where we see about 100,000 on the bid. All right, there was a real big order on the bid. Looks like either a big short is looking to get out or somebody wants to buy a lot of shares. Well, somebody else with a lot of shares who wanted to get out hit that bid, drove the shares down. I wasn't going to risk losing a profit. I like $500. My past career was a teacher where I only made $150 a day. So anytime I can lock in $500 on a trade, I'm going to take that. And that's exactly what happened right here. I had a stop, took the stop out, took my profit, and then the stock recovered, okay, and then worked right back up to 770. Now, in my email, in my text, I said 737 to 770, that's the goal, and the range was 770 very simply because look at this price action resistance right here. When the stock falls this morning, a lot of buyers came in right here. These are all buyers looking to buy the dip, thinking it's going to bounce, had good news, okay? Little did they know it was going to continue to fall. Now, these buyers represent resistance later in the day because they just want to get their money back. All right, they bought the dip. They were hoping that it moved back up into the $8 range. It didn't. They're down 20, 30 cents a share right here, possibly a little bit more. When it gets back up to that range, they're just going to look to break even and play the stock again another day. Unless you get a real big buyer coming in, it's not going to make it through that resistance. So that's the idea here. Just real quick hitters for about 30 to 50 cents a share, pick up a couple of thousand shares, and play the trend. All right, this is technical analysis. The company had good news. It's not really hard to figure out this chart. So everybody really did well on this one today. Nobody could have lost, even with the dip at the end of the day. If you didn't take profit, you're still just about break even. But I issued my sell right in through here. It was actually already climbing again when I had my sell alert out on text and email. And if you were stubborn and a risky trader and you held a little bit longer, you actually got an extra 20 cents a share beyond what I took profit on. So that's the idea behind a gap recovery. And that's how I identified the trading range, and that's what we'll continue to do at PennyStockLive. Hopefully this video helped you out. Take it easy, everybody.